Good morning, Brian Hoops here with Midwest Market Solutions. This is Market Insider TV. This is our opening commentary. It's Wednesday morning, September the 3rd. Thanks for joining us as we take a look at our trading day ahead. Well, I'll be doing RFD TV not only this morning, but also Thursday and Friday mornings of this week. Have not been on yet this week because of Monday's holiday, but we'll be doing 3 broadcasts in a row. Overnight markets, the dollar steady mix, very choppy. Net gas is higher while crude oil sharply lower, reverse completely of what we were 24 hours ago. Well, nat gas was lower and crude oil sharply higher. Stock market is firmer here this morning, a reverse of, again, 24 hours ago where it was lower. Corn down 3.5, beans off 3.5, and the wheat's just a couple pennies lower. Overnight, we saw some deliveries of 586 soybeans, 385 oil, 34 wheat, and 18 KC wheat being posted. So let's get into our presentation here this morning. Our Twitter address, Midwest Markets, Brian Hoops, and our website is MidwestMarketSolutions.com. Crop progress numbers came out yesterday, and this is what gave us a little bounce in the overnight markets as we saw corn conditions fall 2% to 69, good to excellent. That was right in line with expectations, and down 2 from last week, which was 71, and 65% last year. Despite the drop in corn conditions, they're still the best in 9 years for this time frame. 90% of the crop is in the dough stage, 58% dented, and 15% is considered mature. Soybeans fell 4%. That was more than expected and gave us about a 5 or 6 cent higher opening last night. So we're 65 good to excellent. That's exactly the same as last year. And we are the best in 7 years for this time frame, matching last year's numbers. 94% setting pods, 11% is dropping leaves, and spring wheat harvest is now 72% complete, right in line with the average and above last year's pace. Also, yesterday afternoon, we had the census crush report. USDA reported census crush in July, 204.8 million bushels. That's a 5.9% increase from last year's July crush, after June crush was up 7% from a year ago, and the May crush was up 6.3%. So some very strong crush numbers here. And oil stocks in July declined to 1.874 billion pounds. That's down from June. It was also revised lower. And it's the 8th consecutive month that oil stocks in July were below last year's numbers, remained the lowest in 21 years on a month-to-month basis. So that's why soybean oil has a much stronger balance sheet and much stronger fundamentals than, say, meal, where the stocks are extremely tight. So we'll look, grains. I think we're going to see a little bit of weakness here, maybe in some of the harvest activity starting to perk up a little bit around the Midwest. Probably going to weigh on these markets, but the funds do seem intent on covering short positions, particularly in the corn market. This week's cattle facts show list, it's down 100 head for a total of 222,000 head. The cash, I think we're more of a steady call. There's some people trying to call this market higher, but I think we're more steady this week. Cutout values are starting to decline. They were lower on Friday, mixed on Friday, I should say, lower yesterday, and that lower cutouts is what we're concerned about, that we're getting past the demand period for Labor Day and the grilling season, and now we're going to see cutouts weaken, and that could pull this cash market down, and that's really what could pull this futures market lower as well. Notice we closed and traded choppy two-sided yesterday in the cattle market. Have a good day, everyone, and good luck and good trading. As always, we hope to talk to you soon. This has been Brian Hoops with Midwest Markets.